The stock market is looking very soft in the last couple weeks. Is this just a coincidence that central banks are starting to ramp up the rhetoric about tightening their monetary policies? Could it be possible that the situation in Italy will spread to the surrounding countries? These are finally starting to show up in the stock market, and institutional investors are beginning to pull money out of growth stocks, leaving a huge void. You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened in the stock market today. I did a video in the middle of the day outlining what had happened up until that point. I want to give you an update. I'm going to show you all the charts that you need to know, and this is going from everything from the US, China, Europe, and so much more. Let's begin by taking a look at this article. Stocks roar back from a 500-point loss in the Dow, but still end the day lower. In the previous video I had done, it was down about 400 points, 300 points around this time frame in the middle of the day, and I suggested that the plunge protection team could come in and push this up into positive territory. Now they were working, they were doing a good job there, but it seems like they took off a little bit early for the day because it didn't end up going into the positive territory, didn't see the green for the day, and that shows us that there is still some obvious weakness here. Now at the end of the week, we could have a different picture, but I want to really lay down the law and suggest to you that we're looking at numbers in the stock markets that are still back to 2017 levels. We have not been able to grow out of that, and we've got a problem here because interest rates, while they have increased, are still historically very, very low in the United States. We've seen central banks having trillions upon trillions of dollars on their books still today. This is unprecedented levels of stimulus coming on every level. We're talking about monetary, fiscal. We've got this going from left to right, from front to back, and yet they have still been struggling in 2018. What is really going on? I think the markets are starting to understand the weakness. You know, you look around and you see all these geopolitical events that are taking place, and it does nothing to the VIX index. It does nothing to the stock market itself. But now we have earnings reports coming out, and all of a sudden, the markets are spooked. This is just a small piece of the puzzle. It is a historical fact that when you look at the earnings reports, they've never meant more now than ever before. Right now, today, these earnings reports are more important and have more of a, let's say, ability to move these stocks than they ever have in history. It's so strange. Previously, yes, they would have an effect, but it wouldn't be so pronounced. It wouldn't be something that the market is just waiting for. And the way that this market works, it's like a drug addict. It is waiting for that little bit of information to boost it up even further because it's not getting that QE drip. It's not getting that injection that it needs anymore, so it needs to feed off the good info. And that's the way that these market algorithms have screwed everything up. Looking at the all of the major indexes in the US, Dow Jones in the top left, and we got the S&P 500, NASDAQ, and the Russell. Now the Dow Jones did make it over its 200-day moving average, but the other three did not. Either way, we're seeing weakness all around in the US markets today, even after being pushed up towards the end of the day. Still, they are looking very, very weak on this front. These are the technical indicators. These are what the trading algorithms are all doing. They're all paying attention to. And if you can't get over all of these moving averages, you start to really solidify the top, and that brings it down lower. Okay, so we've got to be very careful as to what we say. There's a lot of predictions. By the way, if you want any predictions, there's about 1,000 of them in the previous video I did talking about how the market is going to go up 1,000-point increase. Lots of comments on there. There's a lot of oracles and soothsayers available if you'd like to see them. They're in the comment section of the previous video. Excellent for those people who are able to predict everything. That's great. We'll see how that works out. Global central bank balance sheet. This here shows us that the actual balance sheets, while it has been so ridiculously slow, it actually is happening. They are decreasing their balance sheets, at least their public level of balance sheets have been declining here, and the market is already freaking out. And it's hilarious because this is a direct and correlated fact that you have the S&P 500 or the US stock markets and the global central bank balance sheet that are completely in sync together. Is it a coincidence that this peak coincides with the peak of the markets globally? Is that just a coincidence? I don't think so. Sorry about that. I'm not going to believe that garbage. If you're paying attention and if you've been watching this channel, I know that you are intelligent and you've been following along with this. That right there is something you cannot ignore. All right? You can invest in your 7 shares of Amazon, but you can't ignore the central bank balance sheet. These are the European markets. I mean, we're looking at it as an example. Italy, we're looking at Germany, and they got pounced on in the last trading session. By the time you are seeing this, perhaps they've changed their minds here. It depends on when you're watching the video, but in the last 2 trading sessions, we could see that it has been really taking a beating. Now, the MSCI World Stock Index. Remember very carefully when I talk about the stock market. All right, look at this. This is the MSCI World Stock Index. World Stock Index. All right, we are back into levels we haven't seen since 2017. The same levels. We're 10 months in right now, and we are back to the levels 2017 after all that stimulus. Are you kidding me? This is unbelievable. The markets are doing terribly. Look at US stocks versus global stocks excluding the US. Yes, we've seen this turnaround that has occurred in the short term, but obviously there has been a complete disconnect. The world stocks, okay, major stock markets around the world. This is not, some emerging market in the middle of nowhere. We're talking about global stock markets here. And then you compare that to the US market, and it starts to look very, very interesting. All the money has been flowing into the US market, but suddenly things have changed. And I want you to keep a very close eye on this chart because they're starting to converge. Yes, we can see that they've both head down in this period of time, but it's starting to look like US stocks may be tracing what had happened with the rest of the world. So I'm going to definitely show you updates on that as I can. FANG stocks was pretty funny actually. The market got pushed up so incredibly today, and that's why the market didn't. Well, you can see what happened here. Basically, the market starts off lower, it drops down, and then it just surges higher towards the end of the day. And why? Why is that the case? Well, of course, all these people are buying the dip. Maybe that's going to be a wise decision, maybe not, but I'll tell you right now, institutional investors, the actual big money, not the 7 shares of Amazon, have been selling, and they've been putting their money into so-called safe havens. Whether or not that's a good idea, I'm not here to tell you that. This right here is Tilray. The Tilray stock was bid up. I think it was down something ridiculous, like 17% upon opening, and it just got pushed up so far. And that right there shows us what's happening to this market. It's wild. It's crazy. This is the Italian market. And again, I wanted to just bring to you the last 5 days. It has not been doing well at all. This shows us again the weakness that we've seen in Europe. The Euro viral contagion is on. This is China's market. Something that I didn't cover enough was simply the fact that the national team obviously came in, pushed the market up in 2 days, 10%. Okay, so the market doesn't move naturally 10% in 2 days. That's an intervention. And you could see exactly what was happening. Basically, the market was constantly, this is basically the pattern that it was happening. Yes, it would go up, but the pattern was a zigzag on the way down. And it just changed live as I'm recording this, but essentially we can have the same issues occurring today. Market got pushed up, but the same pattern appears. All right, so I'm going to see what happens as the market opens tomorrow when I look at my markets in the morning, and I'll see, and I'll bring that to you. And I want to end with this. Robot ETF leaves pros in the dust, scoring wins on small cap flyers. What I'm looking at here is the fact that these robots, these algorithms, they are trading constantly every single second of the day. They are actually better than most fund managers. But what's going to happen, and we've seen it before, is that we are going to encounter a flash crash. This flash crash is going to be worse than we've ever seen. They're going to have to halt trading. Many people feel confident because, well, I'll just put a stop loss in. But if you can see what has happened before, this isn't so easy. It's not so easy because you tend to have, in good times, most people haven't sold anyway, but in good times, there's a lot of liquidity. But when you want to sell, which is when everybody else wants to sell, there's no liquidity. And you're going to be stuck holding onto your 7 shares of Amazon, and we've got a problem. And I just don't want people to suffer. I don't want people to have to think, well, the market's come down so much, I don't want to sell now, I'll just hang on. And then it drops by another 10%, it drops by another 10%. I saw this with people in the last crash, and I don't want to see them dealing with the same problems again. That's all I'm trying to just make sure that people are aware, and make sure that people are responsible, that you can't go and blame somebody else. I don't want you to see what we saw last time around. Damn it, Jim Cramer, you told me Bear Stearns was just fine. I hate Jim Cramer and this and that. You can't take his advice. You can't go to Seeking Alpha and try to make judgment calls based on the information that you found from there, or you saw some market analyst and he said the prediction for this and that stock was going to be 50% higher or 100% higher in the next 2 years, so therefore I should put my money in today. And that's how people are investing? Come on, we gotta watch out. There's a lot of problems with that, and I'm going to leave it at that. If you found that informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, okay? That's all you got to do. Just hit that thumbs up button. If you want, you can hit that subscribe button. We have now crossed 150,000 subscribers. I want to say hello to each and every one of you. Thank you for being a subscriber here on this channel. If you want the financial education you were not taught in schools intentionally, they kept it from you, well, I read, I went to seminars, I listened to thousands of hours of audiobooks. I squeezed down my knowledge into 2 easy-to-read, jargon-free books. Check them out. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.